quite a bit. So that when you see in the morning and afternoon comments, to make sure you have both long and short positions in your portfolio, that's usually going to mean that there's starting to be a change of investor sentiment in the market indexes. As we saw in the Dow here for the past couple weeks, that even though they came back up to the top of this resistance level, you could see what the nature of the market had been. Lots of indecision, and I say indecision in the sense that the bears would knock it down, and by the end of the day, the bulls would take it back up. That seems pretty good, except for the fact that the bears were knocking it down. So, as you can see, 1, 2, 3, 4, 5, 6 days, they took it down and then had to bring it back up. But you should now kind of analyze, what does that tell you? It tells you we're in a stage where the bears are starting to express their sentiment. So even though the Dow, and this, we did a session, a Saturday session on when to take profits. We'll probably have to do that again here pretty soon. I was just telling Jim that I'm going through massive cords of firewood, having a fire in the fireplace every night or all day long. And so now we got to look up to see how much longer this winter is going to be continuing. And Jim said that's kind of like the Indian joke, but I might have to go out and buy another couple cords of wood before the winter's over. So the nature of the market, that's important. This is why you see in my some of my comments, what is the nature of the market? Well, we can see that it's been indecisive up here. Now, does that by itself tell you there's a change of investor sentiment? No, it kind of implies that, but here's what told us that there was a change. You can see how the Nasdaq started doing a little whipsawing in here. But when they gapped it down, and now they're trading below the T-line, that kind of confirms that there's been a change of investor sentiment. So this is why this is, again, a good segue into getting beat up in this market, is that we get a little bit of pre-warning. Even though the markets didn't close below the T-line, the sellers are starting to step in, and that should be the information that you get out of the graphics of candlesticks. So what that allows you to do is kind of take some logical trading positioning, meaning if the market's starting to get a little bit tentative, you want to be more apt to start taking profits. So it's always good to find a good, strong trade and have a big move to the upside, good profits. But the question becomes, where do you start taking profits? Well, that was the alert right here. Remember, one of our indicators is if you start seeing exuberant buying in the overbought condition, that is a warning to start looking for taking profits. When they're gapping it up in the overbought condition, that's a sign of exuberance. The fact that they've moved that far away from the T-line is another sign of exuberance. And when you see that all happening up here, now you start watching for your reversal signals. So this is why the Saturday session on when to take profits is so well attended. It's because there are times when you can start seeing it's time to take profits, even though you haven't had a solid confirmed sell signal. The gap ups in the overbought area, even though you've got good patterns to buy, you also have to know when to take profits on those patterns. So another element is we've been strong on the electric vehicle sector. Link was a little bit testy on the way up because it'd come back to the T-line and pop up. Come back to the T-line and pop up. Come back to the T-line, pop up. Come back to the, this time they didn't pop up. They did a bearish Doji sandwich. But here's some of the things that you want to kind of put into your visual analysis. Notice the selling right here and coming back down below the T-line. How was that different than any of this before? Well, previous to that, when they came up, they pretty much broke out through the previous level. This time they couldn't even get up to the previous level, and they started selling off. So that in itself was a little bit suspicious, but what becomes more indicative is if they're selling off the whole sector, and we had a very good run in fuel cell. We finally took profits because not only did we have a sell signal, we had a close below the T-line. So that one was selling off. Others were selling off. So logic says if they're starting to sell off a sector that's been acting very strong, and we're seeing sell signals and closes below the T-line, let's go with the probabilities. It's time to close out those trades, and let's doesn't mean we're out for good. Right now they apparently are resting that sector, so we want to move our money elsewhere. So here's the logic of candlestick analysis. The patterns work. They have benefits to them, which is when you see a pattern setting up, like a fry pan bottom, notice what type of day it had today when the market was pretty soggy. It still traded strong. So you use that pattern setup to your benefit. On the opposite side, you use the dumpling top, which is the bearish form of a fry pan bottom. When was it time to start selling Apple? Well, we can see signs right here that you shouldn't be long. And now you're starting to see a breakdown of this dumpling top. And what do we expect coming out of a dumpling top? The strong down move, like we would see opposite of the fry pan bottom with a strong up move. So the logic that is built into candlestick analysis just simply allows you to see when things are going in the opposite direction, or when things are starting to time to sell Apple is winter. There you go, Harry. If I look at the bearish scoop pattern, we recommended going short on ARCT when we could see that they couldn't get through this level, and then they closed back below the T-line, and it looked like you had a bearish scoop pattern setting up. Where do you think the first logical target was going to be? Down to the 200-day moving average. So this is not rocket science. This is just identifying things that tell you things are turning over. You got a sell signal, and then a close below the T-line. And remember, we recommended this, what is today, Thursday? We recommended this for yesterday, that if it traded lower, you wanted to short it. And it opened positive, traded up. And this is, again, where you take advantage of what the information is in the chart. Look where they failed, right smack dab at the T-line. So what was our criteria today? If this opened lower today, you want to short it, definitely short it, because what would it be doing? The Doji rules that would be trading lower, and more than likely would be doing a bearish Doji sandwich. So this is that 2+2 analysis, where when you could put your signals and your patterns together and knowing your criteria that if you're trading below the T-line, the probabilities are pretty strong you're heading down. And then if they're doing a strong sell signal, even that much more forceful that you're heading down. So we will try to plan, so while we're sitting here talking, we have postponed the power trade session for Saturday only because everybody in Houston was down, meaning Abe, Pat, Becky were all down, so we couldn't get all the information out to everybody. So we're just postponing it for a couple of weeks. We'll pick another Saturday to do it. But we will also try to add in doing another session on when to take profits. So because of candlestick analysis, one of the factors that we can use is the nature of the market. And then there's about 4 other significant elements that we can use to decide when to start taking profits, even though we might not see the true candlestick reversal signal and a close below the T line. That's just one of them. That's the main one, but that's just one of them. Okay, so with that, let me see if I can do this with any great grace. Let's see, hold on. I've got to move this chart over. Do this. Hey, here we go. Got different signals like the Doji sandwich, or just even yeah, Jim, let me know when you're ready. Yeah, just kind of simple rules like you want to see a price move in the direction of how they open it after a Doji or a reversal signal. Advice for slow, choppy markets. William, either the signals better be very compelling or better off just sitting a few days on the sidelines waiting for the market to set up. All right. Okay, you all set? All right. Let me see what questions. Are you mostly long now? No, I'm probably predominantly short. We'll go through those. And it wasn't a function of all of a sudden I went from long to short. It was a process that as the long position started showing sell signals in overbought conditions, it was time to close those out, take the profits, and then maybe add some short positions. When will you be putting up a new video of the month? Kevin, I don't know. Abraham just got back up online, but he's still not at full power. I'm not even sure he has internet. He's doing everything off his iPhone right now. So it'll probably be next week before we get things back up and running. You pay attention to stochastics crossing? No. Or curling down as dumpling tops form? No, your stochastics are probably already in the overbought condition. It's just like a same scenario as a fry pan bottom. Usually when your fry pan bottom is ready to break out, you're already up in the overbought condition. So stochastic, same scenario on a dumpling top, that when you start breaking down, you're probably already in the oversold condition. I can trade indexes if I want to. I used to trade the E-minis off the 1 minute, the 3 minute, and 10 minute chart, but I've gotten too old to do that anymore. When do you start a short or puts? When you start seeing sell signals. We'll get into some of those here in a minute. How long do you wait until you get in a trade? Karen, if everything's moving in the right direction, it might be 90 seconds. If things aren't opening correctly or the market's opening lower, but your position's opening higher, I may sit for a while to see if they're still buying even though the market's lower. So we'll do a members night also on entry and exit strategies. There's 4 different quadrants that you use. But everything that is built into your entry and exit strategy, like everything else with candlestick analysis, it's all just common sense. It's things that you want to see happening, or everything kind of adding up to be the right place to be entering or not entering. Do you see any major signals? Oh yeah, there's a bunch of major signals. As far as in the overall market, yeah, we just looked at. Let's see, what are we looking at now? That's the diamond. So these are the signals. You're in the overbought area and you're starting to see indecision. Today, even though the Dow came back up, it's still a hanging man. So the fact that we're starting to see these signals are telling us there's beginning to be a change of investor sentiment. The fact that we kind of saw a not quite a dark cloud, but when they gap this down through the T-line, that told us after that selling and gapping down, bears are starting to take control. Where do you enter on 3 rising pattern? Bob, if you see 3 rising, which means you get 3 indecisive pullback days, if they open positive and usually gap up after the 3rd day is down, but still not below the previous big candles. I'm trying to think which one was the methods rising. But you buy after the 3rd day when it opens positive and starts trading positive. Then what you want to see is it gets up through the large green candle of 4 days prior, the last big candle. But it's not anything that you really want to make any major up, because 3 methods rising doesn't occur very often. That's why we concentrate on the 12 major signals, because they occur quite often, and they are going to produce the biggest reversals or price moves. CB, I don't know whether it's going to correct significantly, but it's probably got the element of maybe coming back here, which also correlates with the 34, filling this gap. So there might be a few weeks of selling. I'm referring to after the market opens. Karen, yes, there's still 4 quadrants. I would say them real quick. If the market is opening positive and the stock that you're looking at is opening positive after basically confirming your candlestick reversal signal, I'm probably buying within the first 90 seconds. I want to see that it's opening and that they're still buying. If the market opens lower and a stock is opening positive, confirming your buy signal, I'll probably wait to see if there's still going to be some buying or whether it's going to kind of just stall out for a little bit because the market's selling off. If the market is trading positive and the stock that you are thinking about buying is opening lower than where it closed the night before, you don't buy it until it comes back up through the close of the previous day, because that just tells you they opened it lower and then the bulls are still there confirming the signal. And the 4th quadrant is if the market opens lower and your stock opens lower, you don't do anything. That means it's not a good time to be buying. Do you sell covered calls in sideways markets? I don't, Carrie, because even in a sideways market, I'm a directional trader. That the 9,500 trading entities out there, when you do a simple scan, I'm going to find, even on a blase day or even a bearish day, I'm going to find 3, 5, 7, 10, 12 good bullish charts. And on a bullish day, I'm still going to be able to find 3, 5, 10, 12 good bearish charts. So now, if I owned a stock long term and I saw that it was going to trade off, yeah, then that becomes another strategy to go ahead and sell calls against it. How many days can you wait before to say a scoop pattern didn't work? Oh, it doesn't have to be very many days because you'll see that it's either come back below the T line in the uptrend, and that's telling you it's time to get out. Okay, to buy puts, yeah. Going short is either buying puts or shorting stock. It's all the same terminology. When we buy options that are 3 months away, should we keep it even if it's going below the T line? No. The reason you're buying an option is because that's a way to control the stock. And the reason you were buying the option was because the stock price was telling you it was time to buy that stock price. And so instead of buying the stock, you decided to buy the option. Well, if that stock price is telling you it's time to be out of that trade, that's when you close the option. The option is just a piece of paper that controls owning the stock. And going 3 months out, that's probably not the right methodology using candlesticks, because candlestick charts are telling you what is happening right now. So I usually trade somewhere around 2 to 3 weeks out. Please go over the moving averages. Okay, let me find. Here's the Dow. The red line is the 200 simple moving average. The blue line is the 50-day simple moving average. Everybody in the world uses those moving averages to make their decisions about their portfolios, all the major money managers. We don't use it to make our decisions. We use it to see what everybody else's decisions were at those levels. I've got the gray line on here, which is the 34 EMA. It works relatively effectively. And then the important one is the black line, the T line, the 8 exponential moving average. The T line is probably your most effective trend indicator for when a reversal has occurred and when it's time to get out of a position. So this is what keeps people from taking profits just because they have profits. We often state that, or everybody says, oh, you can't go broke taking a profit. You can go broke taking a profit, because the whole point of investing is you're trying to find the big profit moves. But if you're taking profits just because you have profits and cutting your profits short, that's what you're supposed to be doing to your losses. So if you're cutting your profits short, you're cutting your losses short, you're just kind of running in quicksand. The T line is a natural support and resistance level of human nature, kind of a Fibonacci characteristic. So there's just one very simple statement to make, and that is if the candlestick signals are the graphic depiction of investor sentiment, and the T line acts like a natural support and resistance level of human nature, when you combine the two, you've got an extremely powerful trading platform. How long do you stay in a position? Until you see a candlestick sell signal and a close back below the T line, with the caveat that the further away you move from the T line, the higher the probability it's going to come back and test it. So it makes taking profits relatively easy to assess. But if you're in the overbought area and you're starting to see exuberant buying, you get ready to close out this position on any signs of selling. The other way to do it is if you see something that is moving too far away from the T line, now you flip to your 10-minute chart, and that gets you out at the appropriate times, because you're using the 10-minute chart to say when's the selling start. Even though you don't have a sell signal on the daily chart, you know that you're already too far away from the T line. For your members' night, for entry and exit strategy presentation, you have an idea when you might do that? Mike, because we're behind schedule because of this week with Abe and Pat being down, They've got me scheduled. We will try to schedule at least one, if not two, members training session next week. I know I've got one. Let's see. I've got a Metastock presentation on Saturday. Anyways, we'll get them scheduled, especially when it's cold and wintry outside and you just want to sit in and drink. What percentage gains should be shooting for each month? BB, there's no percentage gains. You want to make the best of what the market gives you. So obviously, if you're buying this stock right here on the scoop pattern breakout, and I was pulling this up to show the scoop pattern here, you have no idea whether this is going to be a 12% gain or a 450% gain. Basically, candlestick analysis just puts you in the right place at the right time so that you have the opportunity to be participating in huge price moves. And it also tells you when to get back out of a position, again, using the T-line. I had a 5 to 9% trailing stops in many of my profitable positions, and Thursday morning, many of them suddenly stopped selling off. That was my indication that sentiment had changed. In the past, I would start buying back into these positions, but I've learned this meant volatility was jumping, and I don't do well with lots of volatility. So I stayed in cash as they sold up. All right, Hank, that's the right philosophy. Was it Viacom? Was a message rising? Right in here, maybe. It was another one that we recommended. I'll have to find it. Since a lot of recommendations are late, are Russell 2000 type stocks, do you use the index as a guide? Mike, no, not as a guide, but as a kind of a telling factor that if the Russell 2000 is acting strong, that means you probably want to be in that area. If the Russell 2000 is acting strong and the Dow is flat and the S&P is flat, that means they're buying the small cap stocks. If the Dow is strong and the other ones are weak, that means they're buying the big cap stocks. So, I mean, that's not difficult to analyze which stocks or which sectors are being bought. How do you find the bullish stocks in a bear market? Looking at the highest increase or gaps? Yes, very simple. I'm looking for the stocks that had the biggest percent price move today, and then look to see what type of signals, if they're producing signals. Should we buy the VIX? That's up to you, Ron, as far as you can use it as a hedge, but I don't try to hedge. If I think things are going down, close out positions. If I think things are going up, buy positions. Not try to hedge thinking the market's always going to go up. Trevor, I don't know what that, the T-line is the 8 exponential moving average. If a stock is still going up at your option expiration, what do? You close out, obviously, before the expiration, and then maybe you buy some more options over in the next sector or the next expiration date. So if the Februaries are expiring tomorrow, closed out a lot today, and if they were still heading up, we were buying the March positions. What trailing stops work best, Ron? If I'm in an uptrend in the overbought condition, I use the previous day's open as my stop. Surely a joke incoming. And somebody mentioned synthetic shorts. Okay. Okay. Do long upside candlestick wicks provide probabilities of potential long price objectives. It depends on where they are. A long candlestick wick to the upside in an overbought condition tells you that's where the selling has started. I'm trying to think of if it happens just as the uptrend starts, where they break out to a big candle to the upside but close near the low end of the day or trading range, but you're in the oversold area. Now you watch to see if that profit taking's over by seeing a positive open the next day. I'll see if I can find a chart. Well, here's an example of one where they took it up and came back down. If they open up positive, what's it telling you? The profit taking of the previous day is over. Okay, let's go to common sense analysis. There was our fry pan bottom. Where was a good place to take profits? Well, on this chart, you don't have a sell signal yet and a close below the T-line, or you don't even have a sell signal. So right now, if I was long this stock, I'd have a safety stop right here at today's open. Because logic says if you've got a gap up in the overbought condition that far away from the T-line, that if they have enough selling pressure to come back down through there, that's where the selling has started. Carry, that's up to each individual also. The shorter the time frame, the better leverage you're going to get, but the more correct you better be. So if somebody's aggressive, they might be buying very short term, like 1 week out calls. If you're a little bit more conservative, maybe you're buying the 3 week out. You're not going to make as good a percentage, but you got a safer trade. I am only able to choose either EMA or SMA for all moving averages, not 8 as EMA. And that's, I don't know the answer. That should be, if somebody can help, yeah. All right, so this is what keeps people from, or at least keeps me. Sean, we have just set up a new process, which we call the RARE process, which is research analysis, reverse engineering. In the past, I have told people you don't have to worry about fundamentals because fundamentals do not move prices. The perception of fundamentals move prices. However, we've got some sectors that you can't tell what the fundamentals are doing or which fundamentals are going to be improving one company over another. And I know I slobbered that up pretty well. But, for example, we are now doing an extensive research into the electric vehicle area because we anticipate on a fundamental basis that whole sector is going to be very strong for the next few years. There's going to be a lot of market increases in electric vehicles. However, we don't know which electric vehicle company is going to come out in the front end of all this. So we've been, I'll have to skip around here. This company, Quantum Scope, has been in the forefront as far as producing lithium batteries, but not the liquid-filled. They're working on a solid filled battery, which has a bunch of advantages, major advantages over the liquid-filled ones. But there's other companies working on that we don't even know what they're doing as far as their research, and we won't know until we see some sort of breakout. And that's where we do our research analysis, reverse engineering. We go back and see what the announcement was that created that breakout, which now might produce a very strong move for until somebody else comes up with better technology. So we don't know whether the technology is going to be first put out there because of lithium batteries being improved, or whether the solid body lithium batteries come about, or whether fuel cell technology gets a major improvement. So, and there's lots of different elements of that market, like the charging stations or the lithium mining companies, things that are all going to be benefited by somebody's technology. So that was a long answer to say, yes, we're now reversing our analysis that if we see something strong in a strong sector like the electric vehicles or the biotechs, the first thing we recommend is go back and see what was the announcement or the news that created that breakout. Now, there are breakouts that occur that aren't on a fundamental basis. It might be because somebody upgraded their price target or put out a recommendation. That didn't change the investor sentiment. All that did was a temporary supply and demand of stock, so you have to take that into account. Okay, so that was a long answer. The rate of change and rate of adoption are both getting shorter, so rare is essentially to recognize future success. Yes. So anyways, this one announced QuantumScape was recommended by a major brokerage firm a few days back. Then they came out that they had new advances in their solid body battery, and this is kind of the fundamental stuff that we've been talking about in the members area. To go back and say, all right, the new announcement they had should have some further positive effect on the stock price. So the patterns are what create the knowledge of whether things are expected. For example, somebody was saying Cake, I think Cake had bad earnings and it traded positive. Well, what we have to figure out, or should figure out from that, is the earnings weren't bad enough to that they were less bad than everybody expected. The same example was that TLRY had good earnings, and it sold off. That means those good earnings weren't as good as what everybody was hoping for. So this is why you let the charts tell you what everybody's thinking. So here is a prime example of why you want to go with the patterns. And that is, a pattern is a buildup of investor sentiment, which probably does not have the influence of what the market is doing. It's got something else built into it. So as you can see on this one, and I've got a bunch more, it's traded positive today in a bad market. Why? Because the fry pan bottom is usually going to continue to work in spite of what the overall market has told us. On the short side, we always use the charts. Oh, here was the one that, somebody asked a question today about the T line, or should you buy if you're below the T line and you see a buy signal? And the answer was yes. If you're that far away from the T line, where do you think your first likely target's going to be? The T line. But when you get to the T line, you see what they do when they get here. In this case, I had an evening star signal. That would have told me if I was buying down here, I'm closing here because it told me they weren't going through the T line. So we shorted this one. They came out with earnings, and I think they're trading down here after hours. As far as the biggies, Netflix. You can look at a chart and say, all right, should I be long or short this one? Right now, you can't tell which way it's going. So you can look at a chart easily and say, there's really no direction to Netflix. I don't want to be long or short. NVIDIA. Looks like it's starting to pull back. If I'm long, I know what my criteria is for tomorrow's trading. It better open positive and trade positive. If it opens lower, what's our statistics as far as the T-line? If it's closing below the T-line, the probabilities grow exponentially strong that now you're in a downtrend. So anytime I see a close below a T-line, the probabilities are now going against you. Close out the position. And Apple, when it started closing below the T-line, if you cut the chart off right here, which way was this stock going? It wasn't going anywhere. And then when it started closing below the T-line, it gave you the better impression that you were heading to the downside. QS, the danger of an evening star signal. No, you don't have an evening star signal. All you have is a doji during an uptrend. An evening star signal is going to be at the top of a trend. And where are you on this trend? Well, they've just come out of a fry pan bottom with a best friend signal, followed by a trend kicker signal, and followed by a day where they took it up above the T-line, above the 50, and they're still trading above the 50. What's the pattern that we recognize here? The fry pan bottom. And how long will we stay long on this? As long as it doesn't close back below the T-line. Does that mean it might have some wobbling in here? Certainly. But the overall trend is still positive as long as it stays above the T-line. So this is where you use your what we call the rare process. When we see something break out like this, what you want to do now, especially this being in the kind of the biotech area, you go and see what announcement they made that created that that move. Gail, the after-hour trading doesn't mean a hill of beans until about 7 minutes before the market opens. The amount of volume that you see in a stock, even like Apple, that might trade 14 million shares in a day, can move around at night on 20,000 shares. That is not the market. That's just after-hour trading. So, and the example of that is, how many times have you seen a earnings report come out on something? I'm trying to think of one. An earnings report comes out on Amazon, and then all of a sudden it's trading up here, and then 40 minutes later it's trading down here, and then it's trading back up. This is not on the same volume that you'd see during the day. What the important factor is, what is everybody doing on a as the market opens? If you're an institution and you want to buy 4 million shares of Amazon, you're definitely not going to be doing it after hours. You're going to be doing it when you've got a full market out there. So here's another one that gapped up today, did a big move. So you might want to go back and see what the research to see what the news was. So anytime I see now a big price move, especially in the two areas that I would consider kind of the hot money area, which is the electric vehicle sector and the biotechs, I want to go see what caused that movement. Dropbox, did they announce? Where's Dropbox trading, Will? So the other side of the coin is when you see something like this, a big doji type day, if it opens positive, what do you got? You got a bullish flutter kicker. All right, so okay, so Dropbox was up here at one point, and now it's back down into the 23 area. You know, so Okay, so VTGN was an upgrade, which means there wasn't anything that changed in the company that made it now attractive. So you take a little bit more skepticism when you see an upgrade, because all that is a temporary change of supply and demand as far as the current stock. Okay, so in an up market or a down market, there's still strong signals. HOL, bullish engulfing right here on the T line. Now, for people that haven't been in here before, the fact that they did a bullish engulfing signal right on the T line is very significant, because nobody has the T line on their chart. We put it on there because we identified years ago one of my first private training students, Rick Sadler, called me 6 weeks after the training and said, take a look at the 8 exponential moving average. It seems to work extremely well. So the nice thing about candlestick charts is the number one criteria is the signals. Anything else you add to your chart is just a confirming indicator to improve the probabilities that your signals are working. So when we put on the T line, if it didn't work, we would have taken it back off. But it works extremely well. And the fact that it works extremely well tells us this is a natural support and resistance level of human nature. When we see this, it's more, I don't want to say, compelling to us, because nobody else has this on their chart. It's just up move. We can see it's got a more confirming up move because of the T line. CRMD, observe the obvious. Big move up, profit taking. And where did they take the profit taking? Right smack dab to the T line. What did they do when we got here? They did a bullish harami followed by a gap up. What did that tell us about the T line? Peter, no. If you know that, somebody's buying HOL for some reason. So that means they probably have something in the works as far as setting up a merger with somebody. So that's where you do your reverse engineering, find out what's you want to find out what's going on there. So all this did today would be a little alert that whatever news created this, the profit taking's over. Now that whatever created this move is now kicking back in. So the reason we want to use the patterns is because they have expected results. There's kind of your scoop pattern. Now this is where you put 2 plus 2 together. Look what started this up move right off the 200-day moving average. This is what we call convergence analysis, or create our power trades, which was what we were supposed to be showing this weekend. But notice right off the 200 in the oversold area, followed by a Doji sandwich through the 50 and the T line and the 34. What's that telling us? Well, we know that a Doji sandwich implies more upside. And if that's implying more upside, and there's another Doji sandwich implying more upside, if there's more upside, what's it telling us about this level? That's going to be breached. So this is a good buying area. And how long do you stay in this position? Until you see a sell signal to close below the T line. Okay, Jay, thank you. So here's something else that you want to keep in mind. That if you have a big, huge price move, like we saw in Saba, when the bears start taking control, first of all, you got the bulls in control, and then here was at least the worst case scenario for taking profits when it gapped up and came down through the open. But then afterwards, look where it's going. It goes absolutely flat. So when do you buy these stocks that go absolutely flat? On the next buy signal. Is there any time frame to see a scoop pattern? No, there doesn't have to be a time frame. What creates the illusion of not illusion, but the setup for a scoop pattern is, well, you can see buying. You can see it coming back up. So that's in itself a good time to be buying. But look what you can see happen prior to this. There's that flat handle. So now you're pretty much visually recognizing this is a scoop pattern setting up. There was another scoop pattern. I forget which one it was. No, that was the J-hook pattern we recommended. Yeah, OCGN is the same scenario. It's kind of a wedge, but when do you want to buy this one? On the next positive move, telling us all this consolidation is over. Sean, the volume is already built in. My trading universe is not 9,500 trading entities. It's probably 3,000, and that's stocks that trade an average of 200,000 shares a day or greater. So volume does not become part of the analysis because it's already built into your trading universe. On a, if you happen to see, yeah, that's kind of your scoop pattern there also. Thank you, Suze. But if you happen to see a big volume day at a reversal area, it could be the day of, the day before, the day after. What that basically tells you, there's probably been a change of ownership. So you don't use it as a criteria, but it just becomes an added fluff telling you there's more than another reason why that should be buying. What's a good buy signal on OCG? Again, seeing a strong buy signal. Whoops. So if we saw a gap up and a positive trading tomorrow breaking this downtrend, yeah, that'd be the time to be buying. All right. So you found some more scoops. Yes, there was a scoop on tour. So this tells you when to buy. This tells you when to sell. If you're in the overbought area, where was your safety stop? At today or the previous day's open. Because if it comes down through there, where do you think the next likely target's going to be? Back to the T-line. There's a scoop pattern there. Thank you, SK. That's a good job of finding those. This one is a scoop pattern, except what killed this one? A close back below the T-line. So that puts you in the prospects of a good trade setup. And that told you it didn't work, close it out. Thank you, DJ. Yes, so that's for some of you new folks, the reason we came across this stock was my brother, who is my severest critic. He said, well, how do we know candlesticks work? What do they tell you? And on that day, I said, well, we can scan to see which ones have had the biggest percent price move. And it happened to be on this day. And I said, for example, this stock just came from about 27 cents, and now it's popped up. And he said, oh, that one's got some vaccines going on in India. So as we were talking, I said, well, this is something you could buy because it would have the prospects of maybe going higher because of that news. And as we were talking, he bought it at 73 cents. Now, my brother doesn't do anything that I tell him to do. We sold this one out up here at up in this area. So he went from 73 cents, and I think his average selling price was around 15. And that was more just an example that just seeing what the news was on this day told us, yeah, there's probably more upside. Okay, SK, thank you. Yeah, I forget the name of the bro. It begins with a B. Is this a reasonable trade or at open? On which one are you referring to, CB? Thank you, Barrett. Yeah, biotech. So, anyways, this one worked. I mean, you went from 73 cents to 15 bucks. He was happier than a pig in doo-doo, and now he listens to me every now and then. But that was more of an example to say, because he did the research as we were sitting there and saying, oh, this company's got a vaccine that's being approved in India. I said, well, that's the type of thing that could move it pretty good. Well, the next day it opened up or traded up to $2.70, so he already tripled his money. And no, it was in his retirement account, so now I don't have to worry about supporting him in his retirement. So this is what happens on a big price move. And this is just kind of human nature. When you have a big move like this, as we saw in GameStop, it's come back and it's going to just trade as flat as a pancake. And that's kind of the nature of things. And the reason I know this so well is I've gotten into ones that moved up and I missed it and I pulled back and I'm thinking, all right, I'm going to buy for the next move. And they just go like this. Was XL one? Yes. So you can see that price move. Now, nothing. Why is that? Because everybody's bullish until you get to the area where the bulls and the bears are fighting. And now you've got two forces contending. Where do you go to find news, Vic? On most charting services, you can, for example, on TC 2000, which I use most often, if I see something, there's usually a little house mark underneath, looks like a little house underneath the candle that day. That tells me there's news, and I just go over to the area where the news is and see what it was. Or if you've got TC or Thinkorswim, you see new or you see something move big, you can go to the news and type it in, and it'll show you. Oh, Sean, it was automatic on the most of the time, but then it dropped off on the older version, and now I don't have it. So, but because of the chat room, if we see something big like this happening, I can just say in the chat room, somebody look at the news on XL and see what's going on. Is there like $8 and 80 something bucks? Sean, I don't know what that question is. There's one like $8 and 80 something bucks. That was related to TC 2000. Oh, there's one. Yeah, there should be a delayed one for like 39 bucks a month, and then a live one for 97. Yeah, so yeah, things like this. Somebody was asking, how do you day trade these? Well, if you start seeing setups, now can you always expect a move like this? Definitely not. But notice what happened on this one. There was your buy. There was your gap up through the resistance level. That may have had me out of the trade but I would probably have given it one more day. In this case, they opened and went positive. But if you catch it in time, good one, J or FT. Oh, on XL is hitting the 50. No, you don't. That's why you use the candles. So we need to pay a lot of attention to gap ups. Yeah, if we see something strong, the first thing you want to do is go see what caused that strong move. So this one the other day was an upgrade, but so we wanted to see what happened. Well, it wasn't really great. Then they announced that they had new improvements, and that moved the stock again. And we could see it was a fry pan bottom. So the point that I want to illustrate is when you see a pattern setting up, you're much more likely to see that continue in spite of what the overall market is doing. There's your fry pan bottom, and that one had a nice move up today. LGHL. Whose handwriting is this? There's a big fry pan bottom. Now, how long do you stay in this one? Well, the warning flags are out. Look how far away you are from the T-line. If I was long this stock right now, I'd have a safety stop right here. I know some stocks go up and stay up, like Zoom, Marna, NVAX, Fiverr, NIO. Is that what we are trying to create? Will, yes. Those were all would have been affected at one time. Bah. CCVI, I'm going to do this, which I don't normally do. But CCVI, I don't want to do that. When it had that move right there, that's when you go and say, all right, what happened to take a stock that had been trading flat for months, all of a sudden breaks out, what was that news? And is that news going to create more upside? Oops, no, I want to get off of there. So that's where we use the rare process. But things like Zoom, this was more because of our bubble breakout. When was the time to sell? It definitely should be been out of this one today. And I'm getting way off track here. Where is QFIN? There's your fry pan bottom. There was your exuberance at the top. There was your safety stop. So this becomes very easy to watch what's happening in human nature and use these simple trading rules that you stay long as you don't see a sell signal or close below the T-line, and start being more attentive to your selling if you're moving that far away from the T-line. With the Texas power situation, can we anticipate any equity opportunities? You could, probably on the basis that all the refineries are down. So maybe some of the oil stocks might be selling off. Ahmed, no. CCIV started at wherever, $5, and now it's trading at 26 bucks. That's not the price you're looking for. You're looking for the ones that are breaking out at $5 and can create that upside. Do you ever use, Tim, I don't have to. I'm sitting here each day watching everything, so I don't have to create automatic stops. I can see as I'm sitting here which ones or where I want to move my stop to. So I had this on here for a reason, and I don't know what it was. Might be that gap up through there starting wave 3. Well, I'll quickly go to the next one. Let's see. All right, so when does a fry pan bottom not work? If this is your fry pan bottom, what's our trading rule? You stay long until you see it close below the T-line. In this case, with that dark cloud, one of your 12 major signals, and a gap down through the T-line, that told you to get out of this one. Because what did it tell you about the fry pan bottom? With it closing below the T-line, you want to be out of it. Now, there's another one that is almost the same way. This one has to open positive after this fry pan bottom. This one has to open positive and trade positive to keep the fry pan bottom trajectory in progress. Yeah, Valero seems to be working all right still. And Phillips seems to be working all right. ExxonMobil getting a little bit toppy. No, just because something is selling off doesn't necessarily mean it's a short. What we're looking for on the shorts, which we're just about ready to get to, let me finish a few more and then we'll get to the shorts. So here's another fry pan bottom. Something happened on that day. That's what we want to find out, or on that day we would see what was the news. How long does this one stay long? As long as it stays above the T-line. That's leads. This is container store. Oh, that's because you had that little morning star signal gap up. What's that tell you about your uptrend? They aren't closing below the T-line. You stay long. Once or if the merger between Churchill Capital and Lucid Motors goes through, the next step is to value Lucid Motors, whether due to competition concerns over Lucid's impending launch or general competitive pressures from the mainstream auto manufacturers entering into the EV space. Will, is that a question or is that a statement? When that happens, what's that going to do to the stock price? We have no idea. We watch to see what everybody else's decisions are at that point. And PPBT, there's your consolidation. And where did it reverse? Right here at the T-line. So that something happened there, put new energy into this stock. Then it pulled back. Now you want to see what this information is and see if there's new information. So this is where the reverse engineering comes in handy. What was that news right there? Well, if that was news that told us that this breakout with this best friend signal, what do we got going on? A 45 degrees. So essentially all we're doing is recognizing when there's a major change of investor sentiment and then going back and finding out why there was that major change of investor sentiment and then assessing whether that was just an upgrade and it might not go up further after all that buying is over, or whether they announced something that made them viable for much more upside. Hank, that's true, but that's why we're doing the reverse engineering in the electric vehicle, because the technology is moving fast enough that somebody's technology today might be obsolete in 3 months from now. So if somebody came out and said, our battery now, you only need to charge it once for 1,000 miles, well, that's going to make the batteries that for cars that need to be charged every 420 miles a little bit left in the dust. So we're trying to identify which ones are announcing something that puts them at a market advantage over everybody else. So here's a very simple process. Lucid will go for 550. Anio said they've got a battery that will take them to 620. I thought Tesla announced a while back too that they have a battery that will take them to 620. But QuantumScape said their solid state batteries will probably take it to 1,000 miles on a charge. And they're working on recharging within 15 minutes. Now that was a couple months ago. They said they had a new breakthrough recently, and that's what popped the stock over the last couple of days. So that's the type of information that is going to continue to change the future for a specific company, as well as probably change the future of the whole auto manufacturing business. Okay, so this is a perfect example. When you start seeing things too far away from the T-line, that's where you flip to your 10-minute chart. If you held on to it, your stop would have been right there. Because logic says if there's enough selling pressure to bring it down through that level, they're probably coming back to the T-line. So what we want to look for when the market gets a little bit iffy is which stocks have the strong sell signals. SM Energy. There's kind of an island reversal up here, a Doji gap down. Where's the next likely target? They could bring it back all the way down here, which is the 50-day moving average. Exactly, Hank. Because QuantumScape announced that they had another breakthrough in their technology a couple of days ago, but they didn't even say what that breakthrough was. But that got enough interest in people to start buying the stock with great enthusiasm. Hank, you're our expert in there since you've worked in that area, so you need to be in the chat room more often during the days so we can ask you questions. Will, up until we put the rare process in place, my statement was that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. And that's what candlestick graphics are, the graphic depiction of what's going on in human nature. DJ, I don't think so. There is. I should put the link. Somebody sent me the link. Don sent me the link of the video of the what QuantumScape had been doing, and yeah, I don't want to get way off track here, but they've been working on this for decades. It's not like it's all of a sudden something new, and they do have, I guess, viable research results to show that their batteries do have some great benefits to it. It's still not at the point where it can be commercially ready to go, but they're getting there on a very slow incremental basis. Yes, and somebody just said that, or MJ was saying, they've also got a big cash reserve from people putting money in. So they have already spent billions of dollars on this research. I think Don did a summary for me and said, and the video said they've done over 2 million experiments to get where they are over the last couple of decades. So the point of all this is right now 2% of the total market is electric vehicles. In a year from now, it could be up to 2.8 or 3.5. But the amount of movement into the new market numbers can be pretty much indicating that the electric vehicle market is probably going to be the dominant growth market here for the next few years, with the idea that everybody's pushing on getting rid of the conventional gas engine. So here's the things that we want to look for on the sell side. There's your gap down after failing up here. So we made good money on this one on the way up. Wave 1, wave 2, Morningstar signal sending into wave 3. They gapped it up, did a shooting star. That was about the area they were starting to sell it off. Lumber liquidators. This is in the process of blue ice failure. They fell through the ice. They came up, couldn't find the hole they fell through. They drowned. They're more than likely heading down toward the 200-day moving average. ARCT, look how they couldn't get through this level right here. And when they came back and closed below the T-line, what was setting up? You can see that bearish scoop pattern in progress. Children's Place, when they gap down through the T-line, that's telling you two things. One, the gap down tells you there's a strong selling force, number one. And two, if you're closing below the T-line, your probabilities are dramatically strong that you're heading into a downtrend. QLYS, same scenario. That Doji best friend gap down, then your bearish kicker signal. So this has gone from 140 to 100. Kerry, yes. And some people were asking, should we short things like Blink and some of those? And the answer is you could, but you better have a safety stop always in place. Because on any given day, a little mild announcement could pop it like this, and you don't want to be caught in that big move to the upside. Same thing with the biotechs. A stock is not going to move because there is no news, so it might be drifting lower. But all they have to do is come out one day and say that their phase 2 testing looks extremely good and the stock's up 25%. You don't want to be short, or you want to get out of those as fast as possible. So everything that we look at as far as what's going on in investor sentiment is just pure common sense. If we see sell signals and a close below the T-line, you've got a much better probability of going short. Yes, and you also have the danger of a Robinhood attack or an announcement from the Biden administration, which is what was the result on Workhorse on this day, that they said they're in X number of years, all their cars are going to be electric vehicles. So that worked well until we saw the close back below the T-line. So this is a 45 degree. This is another simple trend analysis, which basically says you can stay long in this 45 degree until you see a sell signal and a close back below the T-line. I think that worked over here somewhere. There was your 45 degree on FedEx. Nice long uptrend. Never closed below the T-line until here. That was the time to start taking profits. Robinhood and Reddit people were testifying before Congress and were out of the market today, no matter the markets went down. Yeah, right now, remember, it's investor sentiment that moves markets, not one particular instance. So here's another one, the gap down, IV or IIVI. Let's get rid of that. That's still a viable short with the idea that if they trade lower, there's your first target, is the 50-day moving average. Yeah, I didn't see what the results were, but I don't listen to congressional hearings because got a bunch of idiots asking questions. Usually the questions aren't going to be very intelligent in the first place. There's your bearish Doji sandwich. So when that opened lower, and this is a perfect example of when you see a Doji sitting right on the T-line, if they open it lower, it's going to move in the direction how they open it. The probabilities are pretty strong. You're going to have a good move to the downside. Maybe one day, maybe 3 weeks, but it's still heading in the right direction. Boring kitty, all right. So anyways, the graphics tell you what's going on. A bearish engulfing signal closed below the T-line. That improves the probabilities that you're heading lower. That's not what I wanted to do. So look what happened up here. Look how far away you're from the T-line. If I was buying stock right here and saw it up here, when it got up here, there's only one thing you want to do is flip to your 10-minute chart, because the statistical probability of this coming back down to the T-line is pretty high. So if you're that far away from the T-line, that becomes your alert to start getting ready to take profits. Same scenario. Up here, you should have been taking profits. Then look what happened. After closing up here, they gapped it down. If they gap down below the open and you're still owning the stock, you close it immediately. Who's in control? The bears are definitely in control. So when you look at things like, which one was it? Can't remember. That's just a fine howdy do. Can't remember. But the probabilities can be seen in the charts. This is why I keep telling people this is not rocket science. This is just knowing that investor sentiment works the same way time after time. So if you see a close below the T-line and you're long, close it out. Then if you see a pattern setting up, now you know you can go the opposite direction. Okay, so with that, are there any general questions on candlestick analysis? Yes, you could. Now, here's the other way to look at it. If you were buying this stock on the fry pan bottom breakout at 20, and 3 weeks later it's trading at 63 or 60, you're starting to see sell signals. Yes, I would start taking some off the table. Now, even though it's continuing up, here's one thing that I always have done in the past to kind of rationalize, to keep my ego in place, which is I'll sell off half the position up here. Or if I sell off the position, I've got to rationalize I'm in the overbought area, away from the T-line. Most people are happier than pigs in doo-doo if they can make 10% a year on their portfolio. If you're making 300% or 200% on your money over a 3-week period, take it. What's your risk factor here? You're in the overbought area, you're away from the T-line. Go find another chart that looks like this. Could you summarize when to short all the factors you use? Oh boy. One, if you're in the overbought area and you're starting to move too far away from the T-line, if you see gap ups in the overbought area, you start looking to take profits. If you've got things that are, trying to think, things like this, where even though you're in an uptrend, that's not a good example. If you've got things that, well, Apple was a good example. That if you went long here and you could see that it wasn't going anywhere, close it back out. There's 5 different things that tell you when to start coming out, even though you don't have a. Obviously, the most defining thing is the sell signal itself. That's not a good chart. So if we see a gap up in the overbought condition, that far away from the T-line, there's 2 trading strategies. One, you'd go to your 10-minute chart. If you don't go to your 10-minute chart, if they open here and start trading here, you put your safety stop right here. Because logic says if that's far away from the T-line, if there's something good happening, it's going to continue to go in this direction. If they gap it up and then they have enough selling pressure to bring it back down through the open, that's when you want to come out, because that means that you're seeing an exhaustion in that price move. And I can't think of, there's 5. I just didn't write them down tonight. But we do a Saturday training session where we go through quite a few examples of each one, so that you can start seeing when it's time to come out of a trade that, let's see, I'm trying to find something. No, that was actually a sell signal. Sometimes you can start seeing that they aren't going anywhere and they're starting to roll over. You're in the overbought area. Yeah, definitely the close below the T-line is the number one. But we'll do, looks like we're going to have quite a few more weeks of winter. So we'll do a couple Saturday sessions, and we'll do quite a few of the member night sessions. Just haven't been able to plan it because I can't get a hold of anybody on my staff because their power is down. Do you do every Saturday? No. Maybe once, maybe twice a month. Yes, blame that darn groundhog. Punxsutawney Phil. Okay, any other general questions on candlesticks? If not, Jim, go ahead and do the double line. And we're trying to keep it limited to 1 or 2 per person, and you should probably have a question of what you want to know about that chart. So FTFT has to open positive tomorrow to stay in it. If it opens lower, you close it out. DPW backed off, but you still stay long as this stays above the T line. And Freeport, you stay long on this one. Use the, at this point, I'd probably use today's low as my stop. GSAT, that one's not looking good. If this one opens lower tomorrow, I'd close it out. And KBNT, another one that when you got up here, that's when you went to your 10-minute chart. This should be doing a 45 degree off of here, which means I wouldn't want to see it close back below that level right there. IMGN, this one you can buy on positive trading and use the T-line as your stop. QS, this is probably one that you could be buying on short-term buying because we still expect this gap to be filled. And you might want to put some of this away for longer term. And that's only because of the amount of research they have done, the amount of testing they have done. They are probably the closest one to a solid state or a solid body battery. And if I might go into, because I want to make sure everybody knows what I know, there's things that in the solid state battery that have advantages over the lithium filled batteries. First of all, you can beat it up, you can break it, you can stab it, and it won't explode like a lithium liquid filled battery. 2, it's much, much lighter. So that's going to take a lot of weight off of vehicles and airplanes or whatever else they put in. And it's probably going to be used for tons of things other than just vehicles. 3, the life of the battery is a lot longer. Where the life of a lithium-filled battery will start diminishing after X number of recharges, whereas the solid-state battery will stay strong after multiple, many more recharging, like for 1 million miles on a car. The recharge time will get very small. A couple of months ago, they said they could do it in 15 minutes. I think there was another company, an Israeli company, said that they got charging capabilities to charge a battery in less than 5 minutes. And there's another one I can't remember. Oops. Let's see, the life of the battery. Oh, why didn't I write these? Rapid, safety, life of the battery, recharging. There's one more, and I can't think of what it is. Anyways, if they come up with a solid body battery, that's not only going to revolutionize the automobile industry, but that might energize or revamp the whole energy business. And just one speculation, which I mentioned in the chat in the members room today, was what if you had a lithium solid battery in your house that it takes 15 minutes to charge, and then it can supply your house with weeks of energy, and when it gets low, you just have the power from the electric company kick in, charge it for 15 minutes, and then you don't need the electricity coming in that whole time. That may dramatically change how much we have to put into utility companies, or that our use of electricity may dramatically drop. Just kind of speculation. Gene, you stay long, you'll use the T-line as your stop. BT, we did. You want to be out of this one with a close below the T-line. TTF, you probably want to be out of this one with it trading below the T-line. Tech, this one you can stay long. Look at your little best friend gap up and Doji, a Doji sandwich right at the breakout area, implying there's probably going to be more upside. That one's a good viable one because where do you think your next target's going to be? Coming up to the top of the channel. American Electric, sideways. It's a bullish flutter kicker signal, just barely. But look at your trend. You got to fight through this. It's in a downtrend. Just because it has a buy signal might not mean it's going to go very far. Dix. There's your bearish left-right combo, bearish doji sandwich. I would stay short, but put a safety stop at above the T-line. Wouldn't want to see it close above the T-line. This one you got to be careful of with the bullish or bearish harami. If this opens lower tomorrow, they're bringing it back down to the T-line area. Window, that one's not working. Lows. Slow uptrend. Home Depot, that one's more energetic. Micron had a good chart. That one you can stay long. And I thought Applied Materials reported, were they trading up to around the 116 level? And Tractor Supply, you can stay long, but be aware that you're probably now nudging the top of this resistance level. I guess I could draw a trend line up through these tops. So got to be careful. You're in the overbought area. You've hit the resistance level. If I was long, I'd have a safety stop at today's open. Viacom, steady Eddie, except you have a doji gap up in the overbought condition. I'd put a safety stop at yesterday or the previous day's close. If it comes down through there, your evening star is in progress. This one you stay short. CPRX, you could buy on positive trading. You don't have a real strong reversal signal here. I guess my answer would be yes, you could. I probably wouldn't. This doesn't have a strong reversal. AWX, you stay long. You're getting toward the overbought area. You put your safety stop right here. Now you got the added plus that this uptrend used the T-line once again as a support. Yes, up there in Puxatani, which is about, I want to say, 2.5 hours from here. Which is probably the right place to have a groundhog testing, because every time I've gone through that area, it is gray and dreary. E-Dog, nothing here. If I was short, I would have covered the short position, but I wouldn't be going long on this one. Now, your left-right combo, it then would be to see what happens once you get up to the T-line. And AKER, when they took this up, and then they gapped down below the previous day's open, the only thing you really want to do at that point is close out the position, because that's taking the wind out of the sails when the bears can knock it down that far. There's another one. When they gap this one up, your safety stop would have been right there. You would have been out of this the next day, because where was your next likely target? Back to the T-line. Oh, must open positive? Yes, if you've held on to it to the T-line, it has to open positive. EQT, that's not good. You got a bearish Harami right at the same level it topped out before. If this one opens lower tomorrow, close it out. You can always watch to see what happens when it gets back to the T-line, but the bearish Harami tells you the buying is stopped. FT or SFT, try to do a T-line crunch, bobble breakout. Not real exciting. I probably wouldn't pay attention to it until it breaks up through that level. When are stochastics considered overbought and oversold? There's a line here at 80. If your stochastics are above 80, you're overbought. If you're below 20, you're oversold. I think that is what's happening, Jay. As I did over the last couple of weekends, kept coming up with Quantum Corporation, which seems to make storage space, but they might be in the process of developing batteries that have no more exploding laptops. They might. So I'm keeping an eye on that one. I didn't know about this company before, and the chart is a slow, steady uptrend. Yes, with the solid body batteries, you don't have the explosion. They said you could stick knives in it, you could shoot bullets in it, and it still, even when you do that, it still produces energy. That could be true too, that they were saying that somebody in Germany that has, I don't know how he would be testing with his cars, but it's not being affected by the low temperatures. Whoops. LYSN. Let's try LSYN. That's not even working. JB, what are you doing to me? Doesn't degrade. Yeah, doesn't degrade in a hot temperature. And Tesla has a Powerwall battery. Charged with solar tiles. I'm sure that's going to be kind of the process. I've been watching GP out of Canada that makes electric buses and bigger trucks, but I guess hypothetically, if you put a solar panel on top of the buses as the roof, charge the batteries, your energy costs would go down dramatically. Yes, and that's why right now the electric vehicles are putting so much demand on some of these microchips that's why Micron and some of these other ones, Applied Material, are doing well, because the demand for their products is well past their supply capabilities at this point. Yeah, unless you live in Texas, yeah. FCK. That's coming up with FCX. Okay. FCX. Also to go with tech. What does tech do? And HBM. That one you can just stay long. ILMN. Is that an electric battery? Yeah, all right. So the fact that they've gapped it up and gapped it up, even though it might be backing off a little bit, still watch this one. I still think your first target right here is filling that gap. Yeah, Ahmed, where was it trading after hours? I thought it was at 116 last I saw it on Applied Materials. Not anything great on Bristol Myers. That's not a reversal signal. And for the magnitude of move, if you like it, you could be buying. Nah, yeah, I guess I would say I'd probably be trading something else. There's better charts out there. HST. Not anything great, but it's heading in the right direction. I would stay long. Just be careful you're in the overbought area as you broke out, which is fine. Use the T-line as your stop. So what's the question? So for a chart like KOPN, when you see it going back to the T-line, does it make sense to buy it back when it gets there? Otherwise, under the circumstances, do you buy the stock back? If you close it out, now you look at it to see, I usually say look to see what it does when it gets to the T-line. I would rather close it out here knowing that it's probably going back to the T-line, but you can't assume that it's going to support at the T-line. For all you know, the next move is down here. So what you want to watch for is to see if they're buying here and doing a J-hook pattern. Then you can decide whether to start buying back again. JB. That's not working. GM is gearing up, yes, and that the new Lordstone's factory, Ohio battery plant will be bigger than Tesla's. Yeah, so that's the other side of the coin too, is companies like GM and Ford are now getting into the business along with Nissan, Honda. Who was the one that's already funded? Darn, can't remember the company. It's already funded QS. But so the problem was, one of the negatives was, well, they haven't even gotten a facility yet. This is QuantumScape. Doesn't even have a facility to do the production. Well, they don't have to. If the technology is now sold or gotten to Ford, GM, anybody else, they've already got the facilities to set up new production. They don't have to worry about the manufacturing facilities, the marketing, the research. They've already got that all in place. So those are other companies that you want to keep an eye on, that if they're moving into the electric vehicles area, you keep watch to see what their advancements are. You need a large area for solar cells, not just sunlight. Hank, what about the top of a bus? And you don't even need it to give you full charging. What if the bus is sitting out all day. Now, I don't know how much sunlight they have up in Canada. I'm sure they have some. It doesn't need to be the full energy source. It may just be an additional charging to those batteries. Oh, they produce zinc. All right. Okay, biotech on ILMN. All right, AMAT. Oh, it's back down to 113.43. That's where it closed, I think. Yeah, it closed. Now it's trading up here at 117.90. All right. KLR, did I do that wrong? Not working. Do you ever sell when a position reaches a price target, or do you always wait for a candlestick sell signal? I always wait for a candlestick sell signal because if you're making a price target, it has nothing to do with what the price is going to do. There are times, though, and I'm trying to think of which ones, where if they stretch up to a resistance level on a strong day, right to a, let's say a, Volkswagen, thank you. If a price is stretched up to a resistance level, like the 200-day moving average, then I'll flip to the 10-minute chart, even though it's not in the overbought area and hasn't got a sell signal. I'll flip to the 10-minute chart to see what they're doing at that 200-day moving average, which is what everybody's obviously watching to see whether it's going to resist at that level or not. So if you've got somebody funding, Ford's also invested in them. All right. All right. Thank you, Hank. Remember, you're obligated to come into the members area each day so we can ask you questions. You would think on-vehicle solar would be like regenerative braking, not to power the whole thing, but just to get a little more extra. Yeah, and there was the other concept that it might produce enough energy to keep your air conditioner just mildly working. Nicola, all right, let's see. Yeah, so when they pop up to this level, look how it stretched to get there. That's where I'm more apt to go to the 10-minute chart. Okay. We have to see what the market does tomorrow. Remember, we're getting into a kind of an iffy stage up here. It needs to stay above the T-line. And the Nasdaq needs to show some strength. Otherwise, we might be in a sell-off here for a little bit. Amazon, you could be buying this one. It's just not a real dynamic chart at this point. Okay, everybody stay warm. We will see you bright and early tomorrow morning. We'll see you then.